All right, let's break down what just happened in the market. It was a truly chaotic day, a perfect storm, really, of geopolitical drama, inflation fears, and some major moves in tech. We're going to cut through all that noise and figure out what was really going on.
So you look at the screen, and it's just a sea of red. The Dow Jones Industrial Average plunged 784 points. I mean, that's its biggest single-day drop of 2026. A really tough sight for pretty much anyone with a portfolio. But at the exact same time, this was happening. WTI crude oil. It surged. We're talking more than 5.5%. So this wasn't just a simple market drop. The market was literally being torn in two completely different directions. And then, to top it all off, you have the VIX, Wall Street's fear index. It spiked over 12%. And when you see this number jump, it means pure uncertainty and anxiety are just ripping through the financial world.
So you're seeing all these numbers flashing, right? The Dow is down, oil is up, fear is through the roof, and you've got to ask yourself, what on earth is going on? So let's dive in, because the answer tells you so much about how our global economy is actually wired together.
To really get to the bottom of all of this chaos, we have to trace it all back to a single headline. One geopolitical flashpoint that sent shockwaves across markets everywhere. And here it is. On the sixth day of this escalating conflict, the news breaks. Iran has launched a major missile attack on Israel. Now, in the world of finance, a headline like this isn't just news, it's a lit fuse. This slide just lays out the domino effect perfectly. It all starts with the attack. That sparks immediate fear that Iran could shut down the Strait of Hormuz. That's where about 20% of the world's oil flows. That fear sends oil prices soaring, which, you guessed it, gets everyone worried about inflation again. And when investors get scared of inflation, they sell stocks. Boom, from one missile to a market-wide sell-off in 5 steps.
And listen, this wasn't just traders getting worked up. The managing director of the IMF, Kristalina Georgieva, she said it bluntly. She warned that if this conflict keeps going, it's going to have a very clear, very negative impact on the entire global economy. That's what the big players were listening to.
But here's the thing. If we just stop there, we miss the most interesting part of the story. Yeah, the headline numbers were dramatic, but they don't tell you what was really happening underneath it all. So let's dig a little deeper.
Okay, now check this out. Look at the massive difference between how the Dow and the NASDAQ performed. The Dow got hammered, down 1.6%. But the tech-heavy NASDAQ? It was barely scratched, only down 0.25%. So what gives? Why the huge gap?
And here's the answer. The Dow is filled with industrial companies, airlines, retailers, companies that could absolutely squeeze when energy prices go through the roof. The NASDAQ, on the other hand, is packed with tech and software companies that are way more insulated from an oil shock. This tells us it wasn't a blind sell-everything panic. No, this was a much smarter, more calculated move out of the sectors that are most sensitive to energy prices. And if we zoom in even more, you find individual company stories that had absolutely nothing to do with the geopolitical drama. You had Broadcom surging 5% on incredible AI earnings. At the same time, Ciena, another tech firm, cratered 16% because its future guidance was weak. And NVIDIA? It fell, yeah, but not because of oil. It was all about fears over new AI chip export regulations. It just goes to show you, even on a day driven by macro events, company fundamentals still matter a lot.
So, this brings us to the most important question, right? With all this chaos swirling around, how is a smart, long-term investor supposed to process all this without just making an emotional mistake?
Well, it really helps to think about this using a framework of 2 different thinking modes. You've got System 1. That's your gut reaction. It's fast, it's intuitive, it's emotional, and it's screaming, "Get out now." Then you have System 2. That's your analytical brain. It's slower, more deliberate. It takes a breath and asks the most critical question. Has anything fundamentally changed about the long-term value of the things I own? Remember that huge spike in the VIX we saw earlier? That was pure System 1 fear, made visible in a single number. But what's so fascinating is that if you look at history, when the VIX gets into that 25 to 30 range, it has often signaled the point of maximum fear and, well, an excellent buying opportunity for those calm System 2 thinkers.
So let's make this practical. Here's a checklist for days like this. First, don't panic sell your core long-term holdings. Second, if you own hedges like energy stocks, recognize they're doing their job. This is what they're for. Third, look beneath the headlines at those individual company stories. And finally, use moments of high fear as a signal to pay attention, not to panic. A missile attack today didn't change what makes a great business great tomorrow.
A day like this is a stress test. It's a pop quiz for the market, and it's a reminder that volatility is just part of the game. So let's turn our attention to what we should be watching on the road ahead.
Moving forward, there are a few key things to keep on your radar. Will energy prices keep climbing and force the Fed to get tougher on inflation? What will the final details of those U.S. AI export regulations look like for companies like NVIDIA? And will the VIX cross that key 25-point level? Because that could trigger even more selling. These are the questions that are going to shape the market for the next little while.
When it all boils down, today's wild ride wasn't about just one thing. This chart breaks it down perfectly. Geopolitics was the main driver, no doubt, about half the story. But you also had inflation fears, tech regulation, and individual company earnings all playing a really significant role. The market is never simple.
So what's the big takeaway from all this? Well, days like today are a test. They're a test of the market, a test of the global economy's resilience, but honestly, most importantly, they're a test of our discipline as investors. Because the next shock will come. It's not a question of if, it's just a question of when.
Which really leaves us with one final question for you to think about. When that next headline breaks and the market starts to shake, who's going to be in charge? Your System 1 fear or your System 2 plan? Are you prepared?